Hello, everybody. Thank you for joining us today, and welcome to this XTB webinar. My name is Walid Kudmani, and I am the market analyst for XTB. And I'd like to thank you all for being here with us. Of course, Chris couldn't make it today, but I will be stepping in for him and giving you a bit of a market update and hopefully some quality content for today. 1 second. Before we start, as always, we'll just wait for a few more people to join, and then we'll just give this webinar a start. As always, I'd like to thank all of you for being here with us. Again, apologize for Chris Laurie. He will be with us next time, but if you haven't received it yet, there is an ebook on gold that you could receive instead of the webinar. He will be with us back, but today, unfortunately, he couldn't make it, so I will be stepping in and hopefully giving you some an outlook on the markets, what happened this week, what to keep an eye on, and some important things to going forward in 2021. Hi, everybody. Thank you again. Hello. Thank you very much for joining us. Again, my name is Walid Kudmani, market analyst for XTB. And some of you may recognize me from the initials on WhatsApp if you're part of the WhatsApp group where you receive news and updates on the markets, or you might be recognizing me from other webinars, trading clubs, and videos on YouTube that we have done before. So without further ado, again, I'd like to thank you all. Again, Chris Laurie couldn't make it today, but I will be stepping in hopefully and providing you with some quality content today. What we'll be talking about today is, again, some top news, what's been happening in the markets lately, some key instruments to keep an eye on. I'll try to keep it quite short. And we'll do a Q&A section at the end. So if you have any doubts, any sort of questions that maybe were unclear or relating to markets or anything in general, please feel free to ask, and I'll try to address them as soon as possible. I'll try to get to the comments as soon as possible. So, as always, the disclaimer. This presentation is provided for general information and marketing purposes only. Any opinions, analysis, prices, or other content does not constitute investment advice or a recommendation. Any research has not been prepared in accordance with legal requirements designate to promote the independence of investment research, and as such is considered to be marketing communication. But of course, this is all our opinions. This is some charts we're going to look at and some news. So let's start with that. So what was some top news this week? I'm sure many of you have heard. We're going to touch on some things. Joe Biden has been certified as U.S. president from the Congress. We saw that happen. The Electoral College announced his win. Officially, what happens is the Congress then certifies the electoral votes with the supervision of the vice president, in this case, Mike Pence. In addition to that, we had the Democrats taking over the Senate after winning the second round of the Georgia election. That was a very contested and very, very close election where almost 1 percentage point counted as a difference. What this does basically is gives the Democrats an effective supermajority, as it's called. So they have control of the House of Representatives already with Speaker Nancy Pelosi. We have control through the Democrats, of course, of the presidency, so through Joe Biden. And then the third level, which was missing at the time under Trump, is the Senate. So currently and before, the Senate majority was Republican with Senate Majority Leader Mitch McConnell. And that dynamic is what kind of constitutes everything in the United States legislation, where a piece of legislation has to go to the House, the Senate, and then to the president. So if any of those are in disagreement, sometimes that usually causes a hiccup. And what we will talk about this webinar is inflation in the U.S. Will inflation in the U.S. soar and trigger further Fed actions, which we have seen? We've seen Bitcoin reach record levels up and down at this point, getting up to 40,000, coming back down. We've seen the U.S. dollar trying to strengthen in response to stronger yields, which US dollar, if you follow the US dollar index, you'll see that recently, as of late, it fell down to the lowest levels in 2018. So that represents really its performance against many other currencies. Wall Street indices reaching new all-time highs. The US dollar trying to strengthen, as I said, in response to stronger yields as well. Crude oil, which suffered massively in 2020. And if you were there, if you followed our webinar on the trading club we did last week on the outlook for 2020 or 2021 and the performance of 2020, You saw that, especially in the beginning of the year, crude oil got absolutely destroyed, went negative prices on future contracts, now has recovered basically to a level of around $55-ish on average for the recent few days. And it also responds positively to Saudi Arabia's voluntary production cuts, which the key issue of oil in general is supply and demand. So if there is more supply and not enough demand, that tends to affect prices in a certain way. And sometimes unilateral cutting of production can impact prices as well. We saw investors looking for new investment opportunities because people are now paying attention not just to gold or Bitcoin, but also to platinum as a precious metal. And so these are some of the top news that we've been seeing as of late. These are the key things that we will be taking a look at today. And these are the things that really have had the most impact on the markets as of late. Of course, we've seen a few other things as you can see from this image, which I'm sure many of you have seen, whether on social media or on the news. Not everyone accepted the final defeat of Trump and the Republicans in the last US elections. That includes, of course, the presidential and the Senate elections, which led to brief riots at the Capitol in Washington. The riots themselves had no effect on the market, or very brief, but actually, ironically, the Democratic takeover of the Senate could have a huge impact on the outlook for Wall Street. And I will be going on into the details to discuss this part. These are the topics we're going to cover today. Let's move right into them. Topic of the week, full victory of the Democrats in the US. Very interesting topic to cover because you have to pay attention to what the Democrats and Biden in particular said when he was running the campaign. Because now, unlike the current situation or the previous, like the recent past and the whole Trump administration, you don't have the mixed Senate. You have, or rather the mixed Congress. You have a supermajority, as it's known, meaning that Congress, both houses, so House of Representatives and Senate and the president are all in the same party, meaning that if he has something in his agenda that he would like to push for, in theory, assuming that he can get every every Democrat in line, because what happened now is the House still controlled, Senate is 50-50. So with these two with these two new elections, they are at 50-50. And who breaks the ties? The tiebreaker in these cases is the vice president, and which is in this case a Democrat with Kamala Harris. And so you'll see that the perspective and mindset from markets is that basically anything Biden said he would do, he can in theory do, because there's nobody from a legislative perspective able to stop him, besides maybe some sort of Supreme Court rulings or some sort of appeals. But in theory, most things should be able to pass through a unanimous vote. And now, this gets translated into this chart. Is the blue wave, which of course means blue in the United States, blue is the Democrat at the moment, and red is Republican. So blue wave would imply the total victory of the Democrats. Is it good for Wall Street, and does it give them hope? Joe Biden has officially been recognized by Congress as the future president of the United States. After the riots in the Capitol, Trump admitted that is now focused on smooth and orderly transition of power. Small note on that. Just because he did that doesn't mean his followers or supporters really feel that way as well. So it doesn't mean everything, but it does mean a lot that he would say that. So in theory, on the 19th or on the 20th, we have a new president in the United States. In practice as well. The victory in Georgia the state of Georgia, made the Democrats gain a majority in the Senate thanks to the vote of the vice president. So as I said, technically it's 50-50. So 50 representatives, 50 senators are Democrat, 50 senators are Republican. And the one tiebreaker is the vice president, who in this case is Democrat. Full power means freedom in Biden's personal choices, which includes electing Fed members, who then, of course, play with the interest rate, who must be approved by the Senate. So nowadays, what used to happen basically is that any legislation that would be wanted to be passed by the Democrats in the current, so let's say in the current state of the United States, where Trump is president, the House is Democratic, but the Senate is Republican. Any piece of legislation by the Democrats has to go through the House, which usually will pass. Goes to the Senate, usually will not pass because Senate Majority Leader Mitch McConnell has a track record basically in kind of blocking Democratic legislations. And even if it does, then it goes to Trump, which again might decide not to. But full power, both in the Senate and in a federal level, so in a presidential level, allows not only implementation of policies, but also implementation of Fed members. What Trump did, on the other hand, was filling the Supreme Court with conservative judges. So again, having massive power in these cases not only plays into the immediate policies, but it plays into the economy and the country for an extended period of time moving into the future, because you can see that, of course, Trump is, he's come and gone, but the Supreme Courts he appoints, Supreme Court justices he appoints, will have an impact onto the wider, economy and social impact way into the future. The market will focus primarily on the stimulus program of the economy, which Biden has announced, whether through an infrastructure deal or an actual stimulus, and direct payments to citizens. The issue of possible tax increases should not be raised right at the beginning of presidency. And that was the big fear for indices, which is why you saw that some indices, especially tech indices, were pulling back, while others were actually gaining. And the reason for that is the perceived tax hikes on high-earning citizens, plus tech companies and high-earning companies in the U.S. announced by Biden. However, the markets are basically focusing at this point they're focusing on the positive side of it. So the stimulus, the direct checks, which then will improve the overall spending in the economy. But on the other hand, indices don't necessarily represent the performance of the economy itself. So especially the tech ones, because you'll see that, of course, last year, macro data was absolutely terrible between unemployment claims, PMIs, anything you can imagine basically was bad. But indices still managed to reach new highs, especially tech indices, were some of the ones that gained the most. And we talked about it in last week's trading club, where we went and saw the most, the indices that made the most gains in 2020 and the ones that lost the most. And you can see that the ones that gained the most were the ones like the US 100 tech index. Therefore, the rally on Wall Street may continue, although cyclical companies certainly have a very good prospect. Therefore, it is worth paying attention to the Russell 2000, which is the small cap index in the US, 2,000 companies. Was falling massively behind last year to US 100, US 500. But again, as we've talked about in previous webinars, these indices are not necessarily representative of the economy. Plus, the weighting of them itself is skewed towards these massive tech companies that many of you may know. So even though the economy itself may not be performing well, if, for example, Facebook, Amazon, Netflix, Google, so Alphabet, and a few other companies, and Apple are performing well, then the index actually itself shows that the economy is performing well, but then everything else, including the Russell 2000, was actually underperforming. Can this be the case in 2020? As it was in 2020, in 2021? That's the part that remains to be seen at the moment, although, as I said, markets are focusing primarily on the stimulus. Commodities performed better than the S&P 500 during the recovery from the previous crisis, but the Russell 2000 was performing better than NASDAQ after the dot-com bubble. Will we see a return to these trends with the return of reflation? So reflation, of course, economies trying to, and central banks trying to stimulate growth in the economy with different methods. Taking a look at a graph or a chart on the X station of the US 100, so the NASDAQ Tech Index, we can see a couple of things. This goes back to August 2020, so August of last year. And you'll see that in August, the index actually dropped to a low of around just over 10,800-ish. And even below that at some points, so below to 10,800. And then this kind of upward move started with a few ups and downs. But if you look at the Fibonacci retracement, so last week we saw a supply response on the US 100 index, as it's known. Sellers showed up at the 127% external Fibonacci retracement. So if you retrace this Fibonacci, basically, you put a Fibonacci retracement on this chart going down, you'll see that the 100% obviously is hit at the start, and then the external retracements start here. And you saw this reaction, as they say, sellers appeared, meaning that people starting to sell, dropping the value, which could suggest greater profit taking as part of the XABCD harmonic structure, these yellow lines and triangles. However, the declines were short-lived and the upward trend was maintained, as you can see. So it tested this level, pulled back, but remained, as we would say, in an upward trend moving up. However, the declines were short-lived. As I said, only a break below the 12,450 level point could trigger a bigger downward move. And I'll explain exactly why that is. A couple of reasons. As you would see, first of all, even after testing this extended external retracement, it didn't pull back below it. Secondly, this level coincides with the 100% Fibonacci retracement, which, as some of you may know who use Fibonacci retracements, you can see even here, for example, there's generally some price reaction to these levels, whether going up or going down, so as supports or resistances. So they sometimes tend to be key levels to keep an eye on, and they kind of treat it as steps. So once one is broken through, then you look towards the next, and once that one is broken through, then you look towards the next. And until then, it's very hard to call it a trend inversion. However, what we're seeing is the threat of inflation around the world and in the US, because if obviously economies continue to grow, or there's constant money supply into the economy, there's constant threat of inflation, which is one of the key factors that helps balance interest rates, their target. Is there more reflation coming? More and more signs of return to higher inflation, we can see. Huge actions of central banks and high fiscal support around the world. So that is part of the reflation. The Fed's forecasts do not indicate an imminent return of inflation. This may, however, surprise the markets, and the dynamics of price growth may reach 2% next year. Even so, which tends to be the target for most economies, is around 2% inflation, but it also ties into the interest rates, which at the moment are extremely low to favor the economy recovery. So keep an eye out for inflation, keep an eye out for interest rates. Again, two key factors always. Even so, the Fed will not change its policy this year, as they have announced they won't do, because they said we will continue to support the economy, we will continue to provide QE, we will continue to keep interest rates at certain levels. However, if inflation starts to actually overshoot the target, it could be a warning sign for the stock market, but also a hope for the commodity market, because the stock market tends to suffer with higher inflation, while commodities benefit from inflation, and especially people who hold commodities. On the other hand, the stock market is also an escape from inflation. If inflation is kept in check, the economic recovery will not only be greater, but we could also see the continuation of the Wall Street rally. And this is really all tying into the policy that governments will announce, the policy that governments will be willing to continue, even if they start to see, for example, some shakeups in the interest rates or in the inflation requirements. But assuming the interest rates and inflation stays the way they are, then potentially these could actually benefit stock markets rather than commodities, which in theory benefit more, and in my opinion benefit more from supply and demand anyway. Government stimulation and economic recovery are driving prices higher. As one can see, inflation has not yet started to rebound. Instead, the inflation expectations are rising, and thus 10-year bond yields. You can see this in the chart. ISM manufacturing report on business prices is the white line, again increasing, indicating inflation. US CPI, urban consumers, NSA, you can see that actually is pulling back, but now recovering slightly. So they're both heading upwards. What to bet on during reflation times? So of course, this is not a bet per se, but some markets tend to be favored, some markets tend to not be favored. And we can see that by these sort of charts. As one can see above, we are dealing with a clear rebound of inflation what markets expect and what other, for example, investors might expect inflation to stay at for an extended period of time. And that really is determined by the level of demand in the economy and the level of reflation, as we were talking about. On the right, one can see yields response to the increase in copper prices against gold, an indicator of the global recovery. As one can see during the previous crisis, these movements were definitely stronger and took place at higher levels. And you can see these, for example, this is 2000, every box here is a year. And you can see that the green line is the USG 10-year index, while the commodity index is on the yellow line. And you can see that there is this kind of proportionate and I wouldn't say symmetrical, but similar patterns that you can see. So slightly after, but in the same way. And now they're both heading up. What to look for then? Possibilities of investment in commodities. Value are also increasing yields, even in the course of current trends in monetary policy. Again, as always, please be aware the information and research on historical data performance does not guarantee the future performance. That's important to note. But some markets tend to benefit more during inflation. Some markets don't. As we touched on, commodities are one of the markets that tend to benefit during inflation. And the key thing is that inflation expectations are changing. So even if certain markets did not expect inflation to increase, now they're starting to expect it because of the amount of help the central banks are giving to the economies. Another market that's been highly followed, we'll just briefly touch on it, is cryptos. Bitcoin reaching around 40K, then pulling back. But we have other cryptos as well, known as altcoins or just other cryptos. Bitcoin recently hit 40,000 for the first time ever. So some of you may know that, of course, Bitcoin was around 25,000, 20,000. It struggled to break through these levels, and then once that happened, it started to just jump up in price. But the key thing with cryptos, and Bitcoin in particular, is how volatile it is, how unstable and unsafe, and especially after breaking through prices that were basically ceilings for a while, very unpredictable. It reached a market capitalization of $742 billion, while the entire market capitalization of the cryptocurrency industry surpassed 1 trillion. So you can see that basically makes up 75% almost of the cryptocurrency capitalization when it hit that much. This time, altcoins have their fair share of success as well. So sometimes what's been seen is like cryptos, Bitcoin will spike, other cryptos will be behind. Some people will try to catch on, they spike, but then Bitcoin falls back down. And then, the other cryptos also follow. This time we actually saw something different. We saw other cryptos as well, and altcoins gaining on that. However, some of them still lag behind, thus creating investment opportunities for people that might feel that way about it lagging behind. But then again, with cryptos, it's extremely unstable and unpredictable. So it's never really that safe, or it's never really like that sure thing of cryptos or Bitcoin's going up, therefore every other crypto's going to go up. That's not the case. Dash is trading around $94 at the time of writing this, and it hasn't seen a full-blown rally yet. Back in November, the coin managed to break out from a symmetrical triangle pattern, which you can see here. And recently, bulls managed to defend major support at $82 on this line here. This is a weekly chart, by the way. So you can see that this actual blue line, you can see is tested here, here, here. This here it's acting as a resistance. Here it just gets broken through, and here it acted as a support again, which tends to also coincide with this 50 SMA, tends to be the green line. The distance between the triangle's highest points would signify an increase of price by nearly 200%. So this drop basically was 200%-ish. And if you look at it the other way around, that's the increase that would be expected if it was exactly symmetrical. But then again, this is all just up to interpretation, up to speculation, because when it comes to cryptos, it's not like we were talking about gold where it's supply and demand. It's not really that simple. According, though, to Into the Blocks IO map, key support is located around $90. The on-chain metric shows that nearly 55,000 addresses had previously purchased over 750,000 Dash around this price level. And this is all this chart is really showing is price points at which traders were buying these assets, so the Dash crypto. And really, that's all it kind of shows. at this point. But looking at the chart, that's kind of the key level to keep an eye on. Moving on to FX, Euro USD, some big moves on Euro USD, some big moves on the dollar. If you any of you are following, of course, the dollar, you saw that the USD index, which kind of represents the dollar against most other currencies, or at least a pack of significant currencies, was at the lowest level in around 2 years. Just a few weeks ago. Slight recovery we've seen. I can even touch on it in the extension after the slides, but basically that's the kind of theme, is that the strength of all these other currencies, like euro, dollar, cable, if some of you trade cable, you'll know, so pound US dollar, CAD US dollar, anything basically compared to the US dollar that was performing well. Yes, was performing well because of its own strength, but primarily was also performing well because of the weakness of the dollar, like in general. And that's the key thing to keep an eye on. Sometimes when you're trading pairs, like a euro dollar, you might think that they're isolated, but they're not, because you have to go and check maybe dollar against other pairs and see, is this movement that I'm seeing limited to the currency pair I'm trading, or is it something more systematic and more representative of the overall performance of the asset? Let's take a look at this chart on euro dollar. Now, ever since then, prices have changed, of course, but this is a weekly chart, so it's a very long-term kind of trend. You can see that lowest level was hit right before the start of the pandemic, basically the peak of the pandemic, let's say the first peak of the pandemic. Lowest level Euro USD hit there, meaning that the euro was at the lowest level and the dollar was at the highest level. However, after that, we saw this huge movement upwards start from this level, going on for until the end of the year, basically, just straight up, with a test of the 50% Fibonacci retracement level. As we mentioned, in the other chart, there was also Fibonacci retracement level. We tested it on support after going up. Big price reactions around the 61%, continues to go, breaks through the 78%, and then runs into resistance at the 88.6%, which is located around 1.234, which is marked with the 88%, as I said. However, the price would have to break. So let's assume a reversal in trend. The price would have to break below the short-term support at 1215, which is, as I mentioned, the 78.6% of the Fibonacci retracement, for a deeper correction to occur. Because as I mentioned previously in the previous slide, they're treated as steps. So, you have to break through one Fibonacci level and then look to the next one. That one turns into a support. At least that's how the theory works. If that one turns into a support, next one is the resistance. That's kind of the range you're looking at. So as long as the price is above this level, then it's counted a certain way. If it isn't, then you start to look maybe and rethink, is the trend changing? Then you would have to look towards the next level, which generally coincides with some pretty key levels. As I said, only breaking this level would open the way towards 120. So again, things have changed. But if you look at the long-term trend, you can see these huge corrections, and yet then the continuation. So even though now we are seeing some price reactions on the euro dollar because, of course, of several factors, look at it on a longer-term perspective and see if it's still as, if you're still doubting basically the current trend. So sometimes it's useful to have shorter time frames, zoom out, check out the longer term time frames, see if the trend is confirmed. Quick note on commodities, which again many follow. Crude oil, after Saudi Arabia's decision, as I mentioned, the unilateral decision to cut production. Platinum, in the interest of investors, and some gold technical analysis, hopefully for you guys that tuned in for the Chris Laurie webinar, which hopefully will happen as soon as possible. So let's go and talk about a few other things. Platinum, key precious metal, again, been lagging behind gold slightly as of late and even last year. Platinum has been at its highest level since 2016. However, recent gains have been impressive and outperformed gold even. The price of this metal is still far from its historical highs, which, if you think about it in a different way, you think, the price of the metal is rising more than gold, so it's outperformed gold, but gold actually broke previous highs. So that kind of logic leads to a perception of potential growth in the future, to where highest levels, so historical highs are usually treated as the last level of resistance. So whatever you see on a chart, usually the last level of resistance will be the historical high, and anything after that is assigned after it's broken, or even before, but assuming that it breaks that level. So anything before that leaves room for improvement. The gold platinum ratio, or the gold platinum price ratio, is still clearly high. And should the economic recovery continue, a rebound in demand of platinum can be expected. Moreover, last year's deficit of over 1 million ounces was one of the largest in history. In the event of recovery in demand from ETFs, the high deficit is to be maintained, which may lead to further gains. So why was there a deficit of 1 million? A few reasons. Mainly, if you were following, and if you're into the, by the way, if you're not in the WhatsApp group for XTB, please feel free to contact your account manager, and they will add you, where we send market updates, news. And at the time, I remember talking about this. Some of you, again, as I said, might recognize me from that, the initials. We were talking about this because what happened was mines closed. So when mines close, obviously there's no supply, or the supply is drastically reduced. That has an effect on prices. Deficit is an undersupply. And in the event of a recovery in demand with such low levels of production, that could actually have some positive effect on the prices. There's also a change in the structure of demand. Platinum is also used in hydrogen cells. Due to its chemical properties, this metal can be used in other branches of the renewable energy sources. And for those of you who were with us last week for the 2020 Outlook, or 2021 Outlook webinar and trading club that we did, I talked about basically copper, and how that market was a very interesting one to keep an eye on, because it's so tied to the advent now and future move into renewable energies. When it comes to things like that, industrial metals, it's very important to keep an eye out. Basically, one thing that was key was demand from China. Second thing that was key was demand from the new renewable sectors. Same thing with platinum. Platinum is a precious metal. It is used for certain jewelry and things like that. It is held by ETFs, but it also, like copper, like silver, has practical uses in industry. And therefore, any industry that is moving towards using more platinum or copper or whatever I said, then you can assume that that is an increase in demand on that end, which, with the laws of supply and demand, tends to have certain effects on prices. The gold platinum price ratio has been excessively high last year. There's also growing interest in platinum on the part of ETFs, which traditionally, really, you'll see that ETF demand is really focused on gold mainly. Silver, platinum, all these other metals. You see that the green line is actually the platinum holdings. This is a Bloomberg chart. The green line is platinum holdings of all known ETFs and the platinum spot price. As you can see, platinum holdings going up after 2019, 2020, let's say here. This is January 2021. So this is the end of 2019, 2020, 2021, going up, the price also following. But yet, it is actually lower than this level. So the price still has quite some room. This is instead the gold spot price, which is going slightly down, and the some moving averages. So simple moving average, 50, 100, 200. Another thing, as I said, oil, key commodity, very traded. Last year, took a huge hit at the beginning of the year. This year, huge focus on oil between OPEC's meetings, the production cut from Saudi Arabia, the return of demand, the vaccination. There's so many factors now affecting oil. It really is a market that is going to be basically dragged from all directions, whether it's regulation, as I said, and we'll touch on this a little bit. And if you have any questions, I'm more than happy to answer them. OPEC Plus, so plus Russia, will not increase production in February, and Saudi Arabia will additionally cut production by 1 million barrels per day in the next 2 months. This was a unilateral decision by them, announced in compliance basically with the fact that they're realizing that the recovery in demand is not happening at the time. with some new lockdowns being introduced in Europe mainly. Limiting supply and sticking to limits can keep oil prices high. The key, however, will be the response from the demand side, because you can't artificially inflate the price indefinitely. The fact is that eventually, if you don't have any supply, or sorry, if you don't have any demand, then you're going to run into an issue where all that supply is going nowhere, and then you'll have a situation where, like last year, people were paying you to take their oil with the negative contracts. But it's unlikely we get to that situation again, because there's been, that was unprecedented, and there's been, contingencies at this point. But the danger to oil is that demand will never return to the previous highs for a couple of reasons. One, the speed of recovery could be so slow that by the time it actually would have recovered, countries are moving to renewable energy, so the demand isn't going to be there anyway. The new U.S. policy may reduce the country's oil consumption, as I said, with the green energy renewable strategy that, let's say, Biden would like to implement. European economies are obviously moving into that direction, the UK as well, and many other developed nations. Maybe from, let's say, developing countries maybe still will have some sort of significant demand for oil, but I would say that even China is moving towards the renewable energy. If you take a look at the budget allocations for major companies like car manufacturers, you'll see that, for example, BMW, Volkswagen, Peugeot, like all these major companies are increasing their budget allocation for EV production and R&D, EV being electric vehicles. Mobility, which this is an Apple chart. So Apple provides these mobility statistics, meaning on how much their clients move, or their users move, let's say. These are 4 countries: United States, Germany, United Kingdom, and Italy. January last year, we saw normal movement drop in April. March, of course, the pandemic. Huge spike then back in the summer, where it seemed like countries were reopening, travel was allowed again, a lot of people were going out. And then, of course, second wave, we see this huge pullback, where not as much in the United States, but that does account for the fact that they are basically the highest, they have the most number of COVID cases. Germany pulling back 26% on mobility, United Kingdom 37% with these even most recent lockdowns, and Italy, which, again, quickest response both ways. They really took it. They took a hard hit. 60%, 61% decrease in mobility, meaning movement. So like transportation movement. And on top of that, as we can see, we are seeing a very strong backwardation on oil, which means basically that there's a difference between the price of spot oil and the future contracts. Another term would be, you have backwardation and contango. Will the current demand translate into further increases in the longer term? And that's the key, is that we're assuming into the future, but at the moment, things have been changing. This will really all depend on the pace of the vaccination, opening, economy. Basically, the recovery from COVID is really going to be tying into this. But as I mentioned here, if you can see my mouse, I'm pointing to the left side of the screen. There is a potential for demand to never ever be at the level it was before. And this is a strategic move in a way from some governments to just shift that and take it as a jumpstart into shifting into renewable energies. So finally, we're going to talk quickly about gold before we go into a quick Q&A section. Gold managed at the time, of course, I know now it dropped below that, but looking at this chart, we can see that the upward trend started at the beginning of December, has seen several key levels, and these are this is what I'm going to be talking about at the moment. So gold managed at the time of writing this to defend the 1900 support, which you can see coincides with a few key things. Gold prices bounced off the resistance area at 1955. So in this upward move that, as you can see, it goes up and down, up and down, up and down, testing this level several times and testing this trend line, then finally hits this level, which is a high basically from November. And so it pulled back after hitting that level. However, declines were halted near a crucial support area between 1895 and the $1,900 level, which both is sometimes referred to as a psychological level. Sometimes big numbers, 1900, 2000 tend to be referred to as psychological levels, which also coincides with the one-to-one reaction area structure, which are these basically rectangles that you can see where it's like one up, one down, and as well as the lower limit of the upward trend channel, which is these the upward trend. You just trace it with some top points. You can see that the bottom line, in fact, the purple line, dashed line, touches a lot of points here, and it actually gets tested quite significantly even here moving upwards, but still holds. Now, of course, we've seen this pullback, but as mentioned in the previous trading club I did last week, we saw that sometimes there can be corrections on indices, especially, and on other markets, of course, of around up to even 15%, and the trend can still continue. So you'll see a correction down 15%, index, huge sale, huge sell-off, upward trend continues even after that. We saw, to the extreme level we want to talk about, we saw up to even 40, 50% drops at the beginning of the pandemic, even though the upward trend continues in the long run. And we saw that obviously indices are up on the year last year, even though there was this huge crash. So despite some corrections, some levels always tend to be key. These ones tend to be very important to follow. The $1,900 level, where if it's broken below, becomes a rough, let's say, potentially a resistance. If it's not broken, then it becomes a support. And really, that was a quick webinar we were going through. I wanted to obviously provide some content and some analysis and some just information for you guys to keep you up to date with what's happening in the markets, as opposed to, of course, giving you nothing when, unfortunately, Chris Laurie was not able to make it today. But we stood in for him, and hopefully this was a useful webinar where we covered quite a few topics. If anybody has any questions, please feel free to ask them in the chat. I'll try to get to them. We'll get through a few questions, and then we're going to call it maybe a day. So thank you, everybody who paid attention and watched. Hopefully this was useful. My name is Walid Kudmani, market analyst for XTB. Now, if you have any questions, I'd be more than happy to take them and hopefully clarify maybe any points you might have missed or just any general curiosities you might have. If you would like to, thank you, Salvatore. Thank you for attending. Thank you, everybody else as well. If you would like to, of course, join the WhatsApp group, please feel free to get in touch with your account manager, and they will be more than happy to add you into it, where you will receive market updates, news, and just some daily analysis on some top moving markets. In addition, of course, feel free to follow our YouTube channel, our social media accounts, and if you enjoyed it, leave us a review on Trustpilot. Of course, we always appreciate it, and we're always looking forward to better ways to provide content and just provide the best kind of content we can across all medium. Thank you, everybody. I appreciate the thank yous, of course. It's my pleasure. And Drazen, I recognize you. Thank you very much for tuning in with us, being a loyal viewer all this time. If you have any questions, please feel free to ask. I'll be happy to take a few questions. So in the meantime, I'll just maybe go through some of the slides or some slide that maybe was not very clear. Thank you, Mark. Thank you, everybody else as well. I really appreciate it. Thank you. Again, we're always looking for new topics. We're still planning a lot of webinars, a lot of content, a lot of videos, trading clubs for 2021. We had tons of moves in 2020. 2021 is supposed to be also a very active year from a market perspective. We'll see, of course, how governments react, but it's already, we're 12 days in, 13 days in, 14 days in, even like 2 weeks in, and we've had some very interesting events, starting with the ones I mentioned at the beginning of the webinar. Am I aware if the WhatsApp group is available for XTB in Portugal? Unfortunately, I'm not, but I do know that basically the way I do it, so I am responsible for the WhatsApp group for XTB UK, Italy, international, and the Arabic markets. We also have it for, gets translated into Vietnam, Thai, and I believe maybe a few other markets, but this is something that we are working on and something that we had started as a branch, as XTB here. And we're very proud of the team at XTB here in the UK to myself as well. Of course, you'll recognize the initials of WK. That's what it stands for. So hopefully you've proved useful. I try to keep a general outlook on the markets through the WhatsApp group. Okay, so Cabello asks where he can get the gold ebook you talked about in the beginning. If you would like, easy, just if you have an account with XTB, get in touch. They will be more than happy to provide you with the ebook. Of course, that was in case there was supposed to be a Chris Laurie webinar today, but unfortunately he couldn't make it. So we're giving you something in return just to provide some value and some content between this video and the ebook. Thank you everybody for following, of course. Yeah, of course. Feel free to ask your account manager. They're there to help you. I'm here to provide any sort of insight analysis that I can without giving investment advice, of course. Gaurav asks, what is the view on silver price? I'll try to give a quick overview on the silver price. Again, like gold, like silver. I talked about it a little bit more in the trading club last week, which we had, the VIP trading club, but I'll just do a quick summary. Similar to gold, similar to copper, similar to platinum, view on silver prices is very tied to two things, mainly, of course, supply and demand, but what is that based on? ETFs, which are increasing their demand of silver, and practical demand of silver, which is increasing because of batteries. So they're used actually in electric vehicle batteries. Unlike gold, which is, as I think I touched on this earlier, is exclusively basically, or almost exclusively, ETFs, luxury sector, so like jewelry and things like that, and some sort of investment, and few practical uses. Silver, platinum, copper, all these other metals have very key practical uses, which kind of drive demand as well. So anything above that will also be driving demand further, because yes, ETFs can hold up all the gold. It doesn't mean necessarily that certain sectors will suffer that much. But if, for example, ETFs start overbuying silver, then that could affect the demand for silver and the supply of silver in the vehicle, for example, sector, in the electric vehicle sector, of course, I mean, electronics, anything that uses silver is tied to the supply and demand through that. So moving forward, keep an eye on for the green movement, let's say green movement energy-wise, that's going to have an impact on silver, ETF demand, and we'll try, of course, our best from our end to provide day-to-day analysis and commentary on the prices and the moves. Would be some changes for EU residents for joining XTB seminars because of Brexit? No. All the webinars on YouTube are approved, basically. So we have a full compliance team. We have a full compliance check. What I provide is not investment advice, so there's nothing really there. It's analysis. I like to do the general approach, and I like to put myself in the perspective of somebody who doesn't really trade or who doesn't know too much, and try to explain to them the correlations between markets, why certain things are important, what to follow rather than what to aim for. You know what I mean? So it would be something like, follow these things and you'll have a clearer idea of the market you're trading, and which is why you don't want to spread yourself out too thin, because otherwise it's going to be hard to follow all the events. Trading isn't about waking up one morning and thinking that you can place a successful trade. It's about methodical analysis, not like as a job, but you have to, for example, follow the markets you trade. The kind sir earlier, Gaurav was asking me about silver. Maybe he trades silver. Maybe he trades another few markets, and following certain things, certain news that are tied to silver, sometimes that can help people get a better trading plan or some sort of a more confidence in the trading. Thank you, everybody, again. But yeah, as far as I know, nothing from Brexit should affect watching webinars. For us, if you're a UK client, then you can tune into the trading clubs. We do the VIP trading clubs. These ones, of course, are more broad, and they are on YouTube. This one we're doing at the moment is, of course, on YouTube. Sometimes we'll do events on Zoom with clients. Sometimes we'll do other things. Waldemar asks, at the end of 2020, I invested in some cryptocurrencies, and I wonder will have any problem with getting profit from it when I'm a resident in Scotland, because there is ban of crypto in the UK. Well, unfortunately, it's not my area of expertise. I'm not going to say that it is. I think my personal expertise, or where my personal interests as well lie are more in the commodities. I really find interesting gold, oil, indices very interesting. Although I have this theory, not even theory, but it's just like the approach that I take is they're not exactly representative of the economy. So you can see that indices perform well, the economy. Because of my job, I get to see and follow the reports. So I'll follow the unemployment reports. I'll follow the CPI reports. I'll follow the ISM PMIs, and I'll see that every factor points to the economy suffering, and yet you see the indices going up. But that to me is interesting. As far as crypto goes, I'm not too aware about the regulation itself for Scotland, England, and the new FCA, because of course after leaving the EU, now it's a little bit different as well. So I think it's best if you find somebody who is expert in the field and can inform you properly. I'm not going to give you any information because I'm not very confident in that sector in particular. Thank you everybody. Of course, again, I'm sorry, I'm looking down because I'm reading the comments. I got this message, says Drazen, access restricted. This promotion is not available in your country, unfortunately, from the country you're currently residing in. Again, these kinds of things are not exactly my specialty, so it would be more beneficial to you to contact maybe an account manager or customer support. They might be able to direct you more. I tend to focus, of course, as the nature of my job, on the markets and how I can help you in that way. When you tried to apply to the Chris Laurie seminar, that might be because it's the UK exclusively, but I'm not sure. Again, these are the things I can't really comment on because I'm not quite sure myself. I'm sure somebody can give you some clarification. Apologies, of course, for any inconvenience. Hopefully this was a good replacement. Your XTD app, yours. Sorry, can you ask the question again? Sorry, I didn't quite catch that question. Let's do a couple more questions as well, and then we'll call it a day. I don't want to keep you on too long. It's already 7:20 in the UK at least. So let's see. Just again, if you have any slides that you found maybe a little bit confusing, I can go back through them. So everybody else, of course, thank you for following this far. And let's get through a couple more questions, and then we're going to call it a day, as I think we've had quite a productive session today. Anything else? If you want to be added to the XTB group, WhatsApp group, where you'll receive messages from the XTB WhatsApp group that I write, of course, then feel free to contact your account manager. They'll be adding you either to the international one, to the UK one. Amarata joins the, again, as I said, if you're an XTB client, that's step one, basically. And then if you are an XTB client, then just contact your account manager, tell them, hey, whatever branch you're in, for example. But there's specific, I'm going to just list basically UK, international English, international Arabic, Italy, Vietnam, and Thai. Those are the ones I know for sure, because personally. And if you're in any of those markets, basically, feel free to contact your account manager. Just tell them, hey, I saw Walid on the webinar or on YouTube talk about the XTB WhatsApp group, where you will receive the news updates throughout the day on some big moves. Maybe sometimes I'll send an article that we wrote in the analysis. And that way you can always stay. It's not going to be a spam thing. It's going to be more of a key thing. Keep an eye out. This is happening. Some sort of data report is coming out soon. Lately, I've been sending the calendar as well in the morning with some key events to keep an eye on. So I think India, I'm not quite sure, but maybe international. So again, check out the XTB website under international, or I'm sure you will be able to find some sort of information on there. Yeah, exactly. Thank you very much for attending the webinar, as always. We will be doing more of these as well. So the topics vary. As I said last week, it was an outlook, much broader outlook on the markets in 2021. This week, it was more of a recap. And then moving forward, we'll be doing some more events as well, both for clients and for this. Too late today, but if you want a recording, we'll have the recording of this as well. So I'm not quite sure how you will get it, but I'm sure you'll be able to get it, the recording as well. So again, for that as well, you can contact the account manager, or you might be able to find it just on YouTube. So after this live stream ends, you might be able to find the actual recording and watch it back and play maybe a part that was confusing to you, or if you just missed it, you can follow it. Rob, yeah, again, no issue there. So if nobody else has any further questions relating to maybe they do the slides or any sort of market, then we can call it a day. If not, I would like to do one more. So if you have one more question, let's make it count, and let's get this webinar done. So let's see. As I said, again, the webinar might probably will be recorded, and you will be able to watch the recording at your own convenience. Yeah, exactly. Thank you very much. Good night from the UK. I'm in the UK as well, so it is quite late. We're getting there. It's been a long day, but it's been a good webinar. So I'm very happy that all of you were able to make it. Again, if you find this kind of stuff useful, feel free to please leave a like on the video. We have other YouTube videos as well. I try to put out content across all aspects, and if you have a positive experience with us, you can leave us a review on Trustpilot as well. But yeah. So that's that. If nobody else has a question, we can just end it here. I'm very happy that you were all with me today. Hopefully this gave you some good overview of the markets, and I wish you the best. So good luck in your trading, and thank you very much for tuning in. See you at the next video.